hour, we cross over to our business chat with our Michael Karanja. As you see, all good to go. Today talking about changing banking landscape. So it's changing. What's happening? What's causing the change?
Banks are being forced to innovate in a way, just to get to customers that hitherto they didn't think about. But now there's a lot of dynamism in the banking sector, and we are glad to be joined by someone who's at the forefront of that. And hopefully we'll be able to shed more light into that. Okay. And just like Sophia was saying, today we are going to be discussing the changing landscape in the banking industry, and we are now joined by Samuel Makome, who's the MD KCB Kenya. Karibu sana.
Thank you.
Just to get things rolling, what are some of the things that are happening in this banking sector that have actually forced people to change the way they view banking, especially when it comes to financial inclusion for everyone?
Yeah, I think traditionally some of the banks that were dominant in the market were foreign banks, and they had very niche markets which they targeted. Some of them targeted maybe just the multinational corporations. Some of them are there just for the upper middle class. But local banks, of course, have been there to take banking to everyone, whether it is the micro customer, whether it's the SME customer, whether it's the very rural customer. I think if coming from KCB, for instance, we've been around for 100 years. And we've been in every county. Places like Turkana, we've been there like 50 years. The reality is, for us, all these people have been part of the target market we've had. So the local banks, and of course not just ourselves, and a few other local banks have wanted to penetrate a bit deeper and take banking to the really, really final frontier of our people.
Yeah. Turn of the millennium 2000, we see the emergence of strong local banks. Now we have the top 5 banks actually held by the likes of KCB in terms of capitalization, in terms of the number of customers they have. What's actually driven the kind of sheer tenacity that we've seen to actually overcome some of the people that were there before?
I think this is a trend you see across a lot of Africa, and specifically here in Kenya, where our local banks, the top 3 banks, are now local. I think previously banking was a bit more foreign because the foreign banks had advantage of technology and those kind of things. But with time, there has been a level playing field. And for the local banks, as they've grown their expertise, the kind of people they can be able to have. Education has grown significantly, banking knowledge, people have worked in the multinationals. So the local banks have the advantage of also having this as their home ground. Traditionally, foreign banks used to listen from a different capital. Yeah. For us, everything is happening here in Nairobi. You look at the ground, you see what's going on, you look at what's happening in devolution. As a local bank, you're able to change and adapt very, very quickly. But foreign banks normally have to hear from some foreign capital. It takes long to make the decision. Then the priority and focus. For instance, certain banks, their focus became Asia. For instance, they used to be Africa focused. They became Asia focused as Asia grew. But for us, this is our home ground. Kenya is our country. KCB traditional was Kenya Commercial Bank. This is your area of focus, and East Africa has been our focus. So with time, as other people get caught up with other priorities and our economies grow, then the local banks become stronger and stronger. And also the thing about local banks, when this is where your core is and where your bread and butter is, then you're going to invest significantly here. Whereas another bank, which is foreign-based, is likely to have many other priorities. For us, East Africa, Kenya is our priority, East Africa is our priority, and Africa is our priority. And this is the story that's happening across Africa as Africa grows. You go to the Nigerian banks, have become very strong. So the top banks actually now in Africa are becoming local banks.
Must be very exciting times for you then.
Yeah, it's very, very good actually. I think for us to be able to prove that we can actually deliver to our people. And the reality is, it is really local banks that can really focus on the issues that touch our people, because we are not discriminating. We are not a niche bank. We are not saying Mama Mboga cannot have a loan. We think she can have a loan. These kind of SMEs that are growing, people may say they are risky, but for us, we want to understand this risk and manage that risk. And then the local banks have also become big enough to do corporate business. Yeah. So we can be able to do facilities at our level of capitalization and growth now. We have got customers who've got facilities of up to 8 billion. Meaning right from the micro customer, right to the 10 billion loan customer, we have solutions for them. The other thing that's also helping local banks is technology. Yeah. Previously, technology was the preserve of other people, but now we are fully wired in terms of technology because of the way Kenya has become itself a technology hub. So things like mobile banking and that kind of thing, this really is the center of the universe for mobile banking.
Before you go into innovation, I'm just remembering a scenario about 10 years ago when we started seeing banks actually pitching tent right in the CBD, looking for foot traffic, people just coming so that they can be able to sign up and actually open up accounts. Is that the kind of aggressiveness that there is right now for actually people to go down and actually break from their comfort zones and actually go that aggressively for customers?
Yes, I think customers, one thing, it's also being driven by the environment and customers. Yeah. Customers have a lot more choice. In the past, banks used to open from 9 till 11. It was like you're getting medicine. It's only the preserve of a few. As time has grown, the economy has grown, people have gotten a lot more choice. And if you sit back and think that people are coming to you, it's not going to happen. So it's very good now for the customer that the bank has to go and look for the customer. It was very, very difficult to get a loan. Now, aggressively, we have to be out there looking for people, because for every one customer, then we have to 5, 6, 7 banks that are targeting them at any particular time. So the competition has become very, very stiff, but mainly it's because of the awareness of the customer. The customer has a lot more choice. The customer is more aware. The customer is more informed. There's a lot more in terms of FM radio these days. So people have choice, and therefore banks have to go out of their comfort zone to be able to reach the client.
That must put innovation at the forefront of now what banking is reaching. What are some of the things that are being introduced in the banking industry where you more or less kind of trying to lower your operating costs in terms of actually sending that person out to look for that customer, or even how the bank is operating itself?
Yes, I think traditionally banks were just brick and mortar. For you to expand, you just had to put a branch out. KCB, for instance, has the largest bank network in East Africa, and it's still very, very relevant, and it still has to grow. In Kenya, for instance, we have 180 branches. In the region, we have close to 240 branches. So in terms of our footprint, it's very solid. And this will continue being important, where customers need to come to the banking hall, particularly for SME, for consultancy, and for those kind of things. There are things people need to go to the banking hall. But for you to penetrate to the last mile, to the final frontier, where the people are, that is not good enough. And one of the major things that have happened in East Africa, Kenya, Rwanda, Tanzania, is the emergence of agency banking. Because it's very costly, for instance, to keep on putting a branch everywhere. To put up a branch, usually a normal branch is up to 20 million shillings just to set the setup cost and more. Plus then you start putting up the staff costs. So by coming up with agency banking, as we have close to 10,000 agents all over, it means that you are now using other infrastructure that exists, and you are being able to expand light and take business closer to people. So that's one major thing that's happening in East Africa, and it's going to happen probably in a lot of Africa. Agency banking, taking banking to every small town, every hamlet, without the costs of putting up huge infrastructure. But the other thing also, of course, is this mobile banking. Mobile banking, Kenya obviously has been at the forefront of mobile banking, being able to send money. Right now with the KCB and Benki, you can open an account right from where you are. Previously, I remember if you wanted to open an account, you needed to travel maybe 50 kilometers, closest branch. If you were somewhere in Moranga, you had to travel some 30 kilometers to the one KCB branch that was there. But now you don't need to do that. Right from the comfort of your sitting room, from using M-Benki, *522, you can be able and you can be able to open an account. So technology has also really made things simpler. And then also point of sale banking. Right now we have so many point of sales all across, both at the agents and also at merchant locations. So I think technology in terms, and also there's internet banking. Previously people had to come to the bank, but now from the comfort of my iPad here, I can easily make a transfer to someone from my phone. I can transfer money to somebody with an account. I can transfer money to M-Pesa. I can transfer money to my account from M-Pesa. So I think the world has become just so much more different. So there are so many more tools, and we are trying to make them even more and more efficient and more accessible to the majority of people.
2 months ago, an email lands on my computer, and it's come here and witness a revolution in the Kenyan banking sphere, and where it was where KCB was partnering with Safaricom to launch Biashara Smart. What's the thinking behind Biashara Smart, and where is that convergence between banking and telecommunications headed to?
Yeah, I think Biashara Smart is a great idea. I think here you see Kenya's largest financial institution and the largest telecom coming together. I think one of the things we've realized, even as we've grown, is that you cannot do everything by yourself. Collaborating with other people, working with other people, where you bring your strengths together, is going to bring better service to our people. We give financial products. We are not a telco company, but the telco company brings telco products, and it's very, very strong in that area. So when you partner together, what you're able to give to your customers, particularly the Biashara customer, the SME customer, is a full package of both financial and communication products. Now, what Biashara Smart is important in doing is that many SMEs, we've always had technology which is limited to only very big clients. Many people who can afford laptops and have to be able to put up huge systems. They can put an Oracle. I mean, those kind of things. But now
they're very costly.
And they're very, very costly and out of reach. But we are saying an ordinary customer in Kenya, an SME, should also be able to get a financial and communication package that meets their needs. They can do their payroll. They can get voice. They can get their data bundles. They can get a quick loan, either on M-Banki loan. They can be able to get a Biashara Smart loan, so that you actually bring those things. So you make the guy smart. He was in Biashara. The smart is about bringing technology to him, giving better TAT for him, and giving him solutions for his business. So we suddenly bring all this, and remember 65 to 70% of GDP is going to be driven by the SMEs. You bring them to a place where they are smarter, they are faster, they also can say hata mimi ni mmoja wao.
Which brings me to the other question where perhaps this been rise of the SME sector, where perhaps, as you rightfully said, 65% of the GDP perhaps is going to be controlled in the SME sector. Now, is it about a matter of just making them more professional in the way they were handling themselves? Because I think from the past experience, it wasn't that of more of a consolidated effort. It's just someone trying to keep books, trying to make phone calls, has the same, his personal email is the same one as his office email, where he's trying to get contact. It's about making them more professional and just accelerating the kind of growth that you've already seen in that sector.
Yeah, it's giving them identity, credibility. That is very, very important for them. Yeah. So part of it is that getting a proper business image. As you say, people can mix up the person, the business. So they get first of all, they get the tools. It's good for their identity and credibility. But also importantly, there's a practical dimension to it. Yeah. For instance, if you're able to keep your books, many SMEs, when they come to, let's say, the bank and say, I want a loan, give me your statements. This person, he doesn't have. He's actually been doing, or he give you your financial accounts. He's actually been making a profit. And you can see the business is there. But when you try to look at the paperwork, it's not there. But if you have the tools, for instance, to be able to keep financial records, it's very, very easy then for you to, and which are very smart tools, easy to use, not too expensive. Then if somebody says, I want to look at your history, it will be very, very easy to you. Easy for you. And if I am a banker and I want to lend to such a person, by looking at that history, even including their M-Pesa history and that kind of history, which is automated, available, then it's very, very easy for me to quickly appraise the SME and give him the facility he requires.
Yourselves in Safaricom have perhaps taken the first step, but do you expect other banks to actually look at this and actually say that there is a business case to be made out of actually trying to make the SME sector more efficient?
Yeah, definitely. I think that a lot of banks are now very SME focused. Yeah. I think Business judged KCB this year to be the best SME bank, and we are. And we've been in the SME world for a very, very long time, and we've always supported small businesses. But it's very big, and if you look at the pie, it's so big, and it's so important that not one person, just like I just said earlier, you need to do collabos. Not one person can be able to cover every single thing. And therefore, there will be many other players, and already there are other players who are doing it. Not only the big banks, but also among the medium and small banks, there are some who are very, very SME focused. So I think we're seeing a lot of attention to the SMEs, and actually it's good for the economy, and it's good for the business.
In the next 10 years, perhaps, what's the biggest change we're going to see in the banking sector?
I think there is going to be a lot more. Technology is going to even play a bigger role. Yeah, so in terms of where people used to wait for things for a week, even for a decision on a facility for 5 days, and it looked low. Sometimes people now wait for 5 days, and that's a revolution compared to what they used to do. It's going to be something where people will be wanting to see things happening very quickly. We are going to see the internet being very, very crucial. We're going to see a lot of new payment types. One of the major things that's going to happen is that the way payments are going to be done, it's going to be very, very revolutionary. There's going to be post-mobile banking payment, actually. So I think we will see a lot more happening in the payment space. We'll see banking sector will always be about primarily giving facilities to people and access to credit. The way it's going to be done, however, it's going to be very, very revolutionary. So we're going to see a huge revolution in how credit is offered. We're going to see a lot of a revolution in payments.
Samuel Wakome, thank you very much for your time and shedding more light into what we should expect from the banking sector going forward.
Okay.
Thank you very much.
That
has been Samuel Makome from KCB, just shedding light on just changing dynamics in the banking industry. We take a short break now, but when we come back, person of interest should be quite interesting today, and we'll be talking about the rise of the MCAs, good or bad. Don't go away. Sophia, we'll be back with a person of interest.